Hey guys, I wanted to go through the markets again, and I wanted to talk about some ways to find the strongest like ETFs and stocks. I've done this before, but each time there's slightly different things that I talk about. So it's just that a lot of times we look at things that aren't going up very well. Like they might have little bursts, but they're not really they're not really strong. So if by focusing on the strong areas, you can really improve your odds, especially with the markets that we have. So I'm looking at daily charts here of the markets, and also I wanted to point out that I'm using Heikin-Ashi candles. So these smooth out the uptrends. They allow you to see the uptrends and downtrends a bit better. And if you go like where it says QQQ daily or whatever ticker you have and say edit, there's a plot style. You can change it. I usually use candlesticks in the past, but Heikin-Ashi just kind of makes it easier to see trends and so if we look at the Nasdaq, and I've been talking about a downtrend for quite some time. When we broke the 50 and the 200, we bounced here, we failed, and so what I'm mostly looking at, if you follow me, you know this, is that uptrends with, so that means that these little dips here, you have higher lows and higher highs. So the high gets higher every time, and then once you break that, that obviously breaks the downtrend, the uptrend. And so this has been a bit of a downtrend here, and then we broke it, but it failed at the 200 and a couple of times here. So if you look at the Nasdaq, you've got this downtrend. So these dots are volatility stops. It kind of tells you whether you're in an up, down, or downtrend. Sometimes it goes up and down as it smaller blips will But the other things, I don't just use that as the guide. I look at down here. You have price percent oscillator momentum, and you can see you're way below zero. And if there's any moving averages, you tend, or support, resistance points, which are the highs. So you can see here, if I click on that it also correlates to the points where it bounced off. So sometimes, a lot of times, you'll actually get up to a certain point and bounce down off this moving average or a previous high point. So that's just where sellers are sitting. But you can see right here for the past week or more, there's been a downtrend again after it bounced off the 200. Now we're broke below the 50. So the next point to be looking at would be, at this support point here where you had bounces 320-ish. But you can see the momentum cross down, and if you want to get a little longer term perspective, you can go to weekly charts. You can see that momentum broke down, kind of came back, and then it's sort of turning down again. And monthly, and this also failed at the 50, went up of the week, 50 week in this case, came up and is heading down, and then the monthly downtrend and break of momentum. So the trends are down. If we go to the S&P 500, similar situation, but this one here is right at the 50 day, but it's it broke down below the 200. The momentum is down, but they are oversold. Stochastics is showing that you're in a roughly oversold area. That just means that there might be a bounce there, but it doesn't necessarily mean the trend is over. IWM has been in this channel, and it's just sort of bouncing off the lower part of that channel. But it's below the 50-day, and momentum is below. It hasn't crossed back up over. So you could get a bounce at that point. But these charts all look pretty bad, since especially way up here when it headed back down. Dow Jones, a bit of a support at the 50 right here, but you did cross down over And so, the markets don't look good as far as the overall markets. So that makes should make you a little cautious when you're trading, just knowing that the overall markets are not great. But I have a tab here called markets. This correlates to a watch list. So you can create different watch lists with TC2000, and you can put them in different tabs. So you have a lot of information in a short space here, in a small space. If you want to get a free trial of TC2000 or $25 off purchase, you can check out the link in the description in my video. I've got the gold plan, the gold membership, and I have US real-time data, so there's no delay in the data. So a lot of people will look at this, maybe you'll sort by percent change. That's a daily change in the stock or ETF. And then they'll click on it, on these ones and look at the top ones. And, that can work, but a lot of times they're in a downtrend and there might just be a one-day bounce, because they've been sold off a lot. So I have scans that I use that search for good uptrending stocks, strong relative strength, stuff like that. But I've talked about that before. So if you click on this checkbox and then you get a scan, and what I say is that the price is crossing back up over the volatility stop, which means it's turning green. And the gasoline is looking good in that sense, that you have an uptrend, you had a pullback, and now you're sort of bouncing back there. You haven't quite crossed on the momentum, but you're very close. And that one is looking good. You can see what happens here when you have a big spike and then a pullback, and then it starts to go up again. It doesn't necessarily sustain itself, and then you end up developing a downtrend. So that's going to be a trick when you're buying on the opposite side of a good uptrend, is that it's not a strong recovery. So this momentum can help you see that you didn't quite cross over. So what I wanted to point out was, with these scans, you can find potentially, these are like initial changes from red to green, but I have other scans as well that look for, above the 50-day and in an uptrend and stuff. But one thing I wanted to point out for this video was, I've got these columns with 90-day, 30-day, and 5-day performance. So this gives you the percentage change in the ETF or stock for that period of time. So I'm going to edit this and just show you the formula. All it is in TC2000 you can write these formulas to do custom scans and stuff like that. This C means close, and C.5 means the close 5 days ago, or you could say C5. So C minus C5 is basically the change in the price divided by the price, the current price, and that times by 100. So that's a percentage difference. And then the same thing with 30 and 90 days. So those are like trading days. And so what happens is, if you sort, I use each one individually, but if you look at the sort 90-day, you can see that the oil service ETF is really strong. And the reason is that when the Russia war happens and stuff like that, you've got different types of oil, ETFs. So the exploration and service are the ones that are really doing well, because you need to be drilling and exploring for wells now. You need to be producing more oil. If you because of the fact that oil is cut off. And metals and mining, you've got copper, you've got steel, and that sort of thing in this one. You can see how strong that is. And natural gas, because they cut off the natural gas, or a lot of gas has been cut off from Russia, so from Russia to the Europe. So basically, they need to find other places. And then of course you have wheat. A lot of wheat comes out of Russia, a lot of fertilizer for agriculture. And so you can see it starting to go up again. Corn has been strong. Corn is used in a lot of cases, and then they're using it now in the States for ethanol, for gas, so that means they're going to use more corn. But by sorting by 90-day, you really see the strong trends. And then what you want to do is look for a little pullback and an entry point, like right after this little pullback here. And then you can also sort by 30-day, and that gives you a more recent uptrend. Uranium has been strong because Russia again. So you had this pullback, and then now you're heading up again. There's been a rise in interest rates in the yields, which means the bonds go down. TLT would be going down. So if you want to inverse fund for that, TVF is an inverse of 20 years. So you see where there's these pullbacks, and after that you can get in. And so it gives you like strong ETFs, and then you need to find a good entry point. You can see the momentum is going up quite high. It keeps crossing over here. Gold, these are junior miners, but sometimes you can draw like a line and you haven't gotten past it, and then all of a sudden you break through. And like I said, you can just quickly check the weekly chart, which have a nice breakout above the 50, and the monthly is just about curling up again, and you're just about crossing. So that looks really nice on the monthly and weekly as well, which kind of confirms the local trend. Silver as well, it broke up over the 50 and 200. There is resistance, of course, but that's looking good. And then if we go to 5-day, other commodities, there's cotton, same sort of thing, really nice, it's got a good 90-day performance and 30-day as well, and it poked out again a few days ago. Cotton, there's a DBC, which is a commodity tracker, which gives you a bunch of commodities, but it also includes oil and gold as well. So it's good to know what's in the ETFs, because you could have duplication in your investments. And then if you have like a silver miner, you can click on this related items, and you can see other stocks. Like if you just want to get stocks instead, you can find wheat and precious metals, stuff like that, and you can scan that as well. Or you can look at the 90, 30-day, and 5-day performance. The reason I have these columns showing up here is when it pops up is that I have a column set, and I say save column set, and then save as a default. So that means it's going to put those columns that I want on every data chart that shows up. So you'll see something, sometimes you'll see a new ETF that you hadn't seen before, like pop up in the strong recent area, and JETS is, but I don't like, this is showing strength, but it has to kind of break up over this before I would get into it, but because I have a 200 right there, but that is looking strong. It gives you the 5-day, will show you certain sectors that you might want to get into. SLX is a silver that looks really good. Obviously it has a good weekly, a good 90-day as well. Pretty good performance, and you've been in this uptrend, and you get these pullbacks every so often, and then you get new entry points that you can consider once you had that pullback. So if you see a pullback in something, don't give up on it. Just make sure, just watch for, that's why I look for the first green candle, which is a good way to find these ones that are still strong and starting to go up again. You can also look at the PPO crossover or MACD cross, which usually correlates to the green volatility stop crossing over as well. You can also look for crosses over the 50 or the 200, because you have this long 200-day moving, and then when it finally breaks through, it doesn't always go up right away, but eventually it will. So you'd want to see it supporting at the 50. So here it came up and broke back down, but once it came up again, and then in this time it's supported at the 50, that kind of shows more strength. I think that's all I want to say for today. So the key point that I wanted to mention was creating little columns with 90, 30-day, and 5-day can kind of weed through the noise and just show you what's actually performed. Because when you look at ups and downs, you might not notice like what it's doing in terms of its performance over a period of time. Usually you can see an uptrend or downtrend, but it just kind of makes you focus on the actual percentage gain. And those tend to, sustain themselves for a while. So when you see like oil is 38% gain in 90 days, it also has a recent gain. So they tend to, even if they have pullbacks, they tend to continue up again. So hopefully that'll help you find the strong sectors to be in. And even though the markets aren't doing great, there's definitely been sectors that are doing really well. So don't forget, you can get TC2000. The link is in the description below for the charting software. See you guys.